Welcome to The Winning Move. I'm your host, Stratton Brown. Some quick housekeeping things. If you guys are looking for any VAs, go to callmagicians.com. We have a badass guest on coming today. Today's closing on what? Are you closing on it or are you putting it together today?
No, we're closing on it, man. I mean, fingers crossed. We should be. I already signed all the closing documents. The attorneys are just going back and forth on all the final pieces. But yeah, it's the biggest deal I've ever done. I've done a lot of deals.
How big is it?
$77.6 million deal. That's what our all-in cost is, and it'll take probably 2 to 3 years to stabilize it. But the stabilized projections it'll be worth a little over, probably about $106 million in a couple of years. So about $30 million of equity in that bad boy.
Was it scary?
No, just
talking about the
add another
process.
Zero, dude. You just add another zero, and so I mean, it's definitely, there's nuances with it, right? Like that's a lot of money. The deal morphed a lot, and it moved around. We had different financing structures, and they swapped the financing on us about 2 weeks ago. So we had to raise another couple $1 million, which is cool. It just,
Why'd they swap it?
So long story short, we had traditional debt that we were going to go with, and then we had mezzanine financing. So what that means is we had Fannie Mae, Freddie Mac, agency lender, who's going to give us, 80% of the money. I think it was 75% of the money. And then we had mezzanine debt, which is kind of like a second mortgage that comes in and was going to give us another, 15% or something like that.
Oh,
so
wow.
What happened was we would have had to bring 10% down, which was only $7 million. And
Okay.
The mezzanine lender said, "Hey, we have our other fund, and we can give you 88% of the money." But then they didn't need any equity in the deal, and so because we were going to give them a chunk of the equity in the deal for bringing the mezzanine debt, and so it allowed us to then move them out. They brought 88% of the money, but then we had to raise essentially whatever it was, $8.5, $9 million. And that just happened 2 weeks ago. So now it's us and our equity investors own 100% of the deal. And we don't owe anything to any institutions or anything like that. And it's, so it turned into a pretty sweet deal for us, turned into a real sweet deal for our investors, turned into, it was a good win for all around. It's just, last minute changes on everything, just throw the attorneys for a loop and get their panties in a twist.
How often does that happen? Where 2 weeks before we're about to close, some random shit like that happens? And then how often are these lenders wanting equity in the deal?
Yeah. So if you go and get mezzanine debt, or if you go and get institutional equity, they're going to get equity in the deal. That's, any institution typically wants that. This one was different because they had two funds. They had an equity fund and they had a debt fund. And so it allowed them, because Fannie Mae, Freddie Mac doesn't want somebody to put a second mortgage on. So the only other way to secure them is by giving them equity in your deal.
Okay.
And so what it allows you to do when you go with the same lender for both the first mortgage and the mezzanine debt is it's the same lender. So now it's just two layers. It's like two loan closings. First mortgage, second mortgage with the same lender. They feel a lot more confident and comfortable doing it that way. So they didn't need any equity. They were okay with the second mortgage. That then allowed us to own 100% of the deal ourselves. We brought in some equity investors, carved up a piece of the pie for them, and then me and there's two other partners that are involved in it, and we carved up the other 75%. So it's essentially a quarter across the board. Our investors get a quarter, and then the three partners each have a quarter of the deal.
That's amazing, though. And so what is that? So it's going to be worth 130 million. What's the math on that? You get 25%.
106 million.
106.
Yeah, but it has $30 million of equity. So this deal increases my net worth by $7.5 million, single deal.
Out the gate, no matter what.
Well, I mean, we got to stabilize it, but it's in good shape. We have a plan in place. We got a management company that manages over 100,000 units. That's headquartered a mile and a half down the street from this asset.
Oh, yeah.
We got my one partner has a construction background. He's overseeing all the project management. He's been doing it for 25 years. And then the other partner's big finance guy, and he's a stud. So it's just, my team's handling asset management. It's a timing type thing. We're projecting probably let's call it 36 months with COVID and all the goofiness that's going on there, but we'll turn everything over the next kind of 3 years. And bump up the rents. We'll make a lot of improvements to the units and just kind of cosmetic improvements and put some efficiencies in place. And dude, it's going to be a good deal. Here's the real sexy part. Over the next 30 years, let's say we refinance it in 3 years, 4 years, 5 years from now, and we put longer term debt in place. Let's call it's worth $100 million. And then we throw long-term debt in place. That loan will then get paid off over the next 20 to 30 years, right? And the property, I don't know. Like, what do you think? You think values have at least doubled since 1990, right? Over a 20 to 30 year period. So think about this. 20 years from now, 25 years from now, the property is now worth 200 million. We paid it off in full. And my net worth from a single deal is around $50 million because I own about a quarter of that deal.
Dude, so
from that one deal. So how many times can you do that, dude? We buy a building a month, you know?
I thought most of these commercial loans had balloons though.
Yeah, well, I mean, if you want a balloon, like so this loan that we got has like a 5-year term or something on it. So we're just going to refinance once it's stabilized at the higher value, and then we put long-term debt in place. So it'll be amortized over, let's call it 20. It'll probably be amortized over 30 years. We'll probably get a Fannie Mae, Freddie Mac type of a loan, but there'll be a balloon on it probably in 10 to 15 years. You can get it fully amortized, a full-term loan. So you can get a 30-year loan, 30-year amortization schedule, just the interest rate's going to be higher. There's kind of a sweet spot around that 10 to 15-year mark where you can get a low interest rate and not have a balloon for 10 to 15 years. And then, dude, you're paying down principal, and then you can refinance again in 10 to 15 years at a lower amortization schedule if you wanted to, or we can extract a bunch more tax-free loan proceeds and just let our tenants pay down the mortgage again for the next 10, 15 years.
And I don't know anyone who's done that big of a deal, right? Like that's the type of shit you hear Grant Cardone doing. Congrats, man.
Yeah. He's got some good stuff going on, man. He doesn't I would never do most of the deals that he does though, because they're overpriced. He overpays for them.
Right.
Very, very skinny margins. But he's got access to FU money. There's people willing to give him money at 4, 5, 6%. My money costs me more. My money is more 8 to 10%. And so, and he's the flashy guy and he cares and he's in it for fees. I don't take a lot of fees on my deals. We do take some acquisition fees and this one is our first time ever taking an asset management fee actually. But dude, he takes asset management fees, fundraising fees, loan sponsor fees, acquisition fees, disposition fees, capital events fees. Dude, he just fees the shit out of the deal. And that's where he makes his money on a $160 million deal. When he makes 5% on the front end, when you take the deal down, dude, all of a sudden that's an $8 million check. It doesn't need the cash flow. He doesn't give a shit because he's got his money off the table. And dude, I'm not trying to poo-poo Grant Cardone. I have a ton of respect for the guy. That's his business model. It's just a different model than what I'm into it for. I'm not into it for the fees. I'm into it for the equity and the long-term wealth building.
Well, my friend invested with him and he was like, bro, it's been awful. Like the returns that he gets, he was like, I don't know. And then what's it called? When COVID hit, they held a check from him.
Yeah.
And all this other nonsense to where that shit was just terrible.
Yep. So okay. I don't know, man. I actually was going to throw some money in one of his deals just to see what it was like. Just so I have something to compare it to. It gives me more posture when I'm talking to my investors. Be like, hey, go and talk to this guy then. If you don't like my deal, But my deals are sweet. I like overpaying my investors because that way it breeds a lot of loyalty. If somebody else dangles a carrot in front of them that says, oh, I'll pay you 11% or 12%. No, I pay him a solid, again, 8 to 10% fixed, whether the property performs or not. And then when they get all their money back, they keep equity in the deal forever. So it's a sweet deal for them because, again, somebody dangles a carrot. They're like, no, Tim's my long-term partner. And they just want to keep on rolling forward into more and more deals every time I give them their money back.
So are you raising all of your money still? Do you have an in-house money raising guy? What does that look like?
I'm kind of sorry, the light just kind of went weird. I'm still kind of the face in, I would say here, I'm the fuel that drives the engine. So I have an engine, a chief investment officer who was my business attorney for 6-7 years. He came in-house a couple of years ago, and now he handles all SEC compliance. He handles all capital management, investor relations, all that kind of stuff, all the paperwork, crosses all the T's, dots all the I's, keeps everything super black and white. I kind of go and build the relationship through social media, podcasts, through my coaching business. And then when somebody reaches out, they say, hey man, I want to invest. I introduce them to him. And then he essentially order takes, what kind of deal you want to be in, short-term, long-term, how much capital you looking to deploy. And depending on that, then he puts them in the right deal.
And so most of your investors, this is a long-term relationship, right? Like once you get them in, you can keep them in, and the money gets easier and easier to raise because you're just recycling capital. Is that the way it works?
Yeah. Yeah. And the more, dude, it's like anything, like the character that you build and the confidence that you build by doing more and more deals, and having a track record of having successful deals and paying the investors well and taking care of them and doing the right thing. That starts spreading. Then they start telling their friends about it. They start telling their other business partners about it, people that they do business with. And all of a sudden it just kind of starts snowballing. So, but it's like anything, dude. Like you do big deals and it's feast or famine on access to capital. So sometimes I got too much money and not enough deals. Other times I have too many deals, not enough money. Just kind of, it's a balancing act all the time in that side.
Wow. So why multifamily, man? Why multifamily? Then I want to get into how you got into all this, but why multifamily out of all the other asset classes? I'm looking into self-storage because I hate tenants, right? I fucking hate them. And then you have trailer parks and all this other things. So why is multifamily your lane?
Yeah, man, I come from the residential side. So I was flipping houses. I was wholesaling single family. I bought a small office building that was my own office and I rented it out to other tenants. I bought mixed use retail on the ground floor with apartments above it. And, I think apartments was kind of that natural transition from single family into commercial real estate. I'm familiar with the other asset classes. I own 3 office buildings. I own some vacation rentals. I have 3 storage facilities, self-storage facilities, and I like other ones. But every time I go in, man, there's a learning curve. I spend time, I spend money, and multifamily is just kind of what I'm known for. And really, my team is just fucking dialed in, dude. Like they have their shit together. My COO is an absolute stud. He's got all these standard operating procedures and all these KPIs in place and all these metrics for measuring staff and management and everything else. And really multifamily is the only asset class that is mandated, where HUD mandates Fannie and Freddie to continue lending regardless of what's going on with the economy and regardless of what's going on with the markets. So like, dude, when COVID hit, hotel lending shut down. Retail lending shut down, office lending almost shut down, and multifamily still rocking and rolling. They have to continue lending on that side just because of the whole housing side of things. So I like that. There's definitely a pain in the ass with the tenants, but when you get into commercial and bigger stuff, you're dealing with a more sophisticated class more professional class of professionals across the board. Like your management company is more sophisticated and doesn't only like collect rents and put it in an Excel spreadsheet and send it to you. Like they have management software, they have in-house CPAs, they have like very sophisticated 6-figure salaries that are helping to be the regional manager or VP of property management to make sure your shit gets taken care of. So like that's a big deal. Your contractors can't just swing a hammer. They actually know how to balance a budget and they actually know how to show up on time and make sure that people are held accountable. So like all the different vendors that you're working with are just more sophisticated when you get into commercial. And like I'm open to other asset classes. Again, I'm developing 800. I think it's going to go. I think it's like 810 units or something in New Jersey right now. But I partner up with my buddy Joe, and so my buddy Joe is the one who really understands that asset class and understands the development side of things. And I'm just bringing capital. I'm sponsoring the loan. I'm partnering up, from a advisory mentorship type standpoint, because a lot of that kind of stuff can transcend industry asset class. But I'm not operating that stuff. I got into like speculative land, got my ass handed to me. I didn't lose money, but I definitely didn't make money, and it took me 2 years. I got into vacation rentals, and I stopped doing vacation rentals as soon as I got into vacation rentals.
How come?
I got into single family. I thought it made a lot of sense to buy a couple single family houses outside of Disney World. I was like, dude, talk about a staple. Makes sense. There's always people going there. Like, there's no better economic anchor than Disney. It went great. The problem with the vacation rentals is like there's not good financing for vacation rentals. So
Okay.
like the financing that I got was like 7.25% interest rate on 70% of the money. And then I borrowed money from my investors and I didn't structure it the way that I should have, but I'm paying my investors 10%. So my blended cost of capital is like 8.5%. And the thing performs at like an 8 cap, which is we're one of the top 1% of all vacation rentals in Disney in Orlando
in the area.
Yeah, performance wise and booking wise on vrbo.com at least. And but dude, and so I got it to yield an 8% cap rate, but I guess what, I'm paying 8.5% on the money. So fucking I'm losing money every single month. You know what I mean? Now I'll refinance it and I can get into like cheaper debt eventually, but just kind of a kick in the balls. And then dude, they're building developments for vacation rentals in Disney World. So nothing's unique. There's so much supply that the prices have come down significantly on the rentals. Dude, like I rent a 6-bedroom, 5-bathroom, built in 2017, I think, house, 3,300 square feet, screened in lanai, pool, hot tub, overlooking a man-made lake for $199 a night, less than the cost of a hotel room, dude.
Really?
It's insane. That's how much pricing has been compressed down there.
Wow. I wasn't expecting
Wild,
to throw out anything under like $500.
No, dude, less than a hotel room. You can get a 6-bedroom, 5-bath house with a private pool and there's a community pool and community lazy river and all sorts of stuff, man. Like it's $200. You kidding me? It's crazy.
Dude. Okay. That's crazy. I want to talk to you about your haters, dude. So I look up Tim Bratz so I can put my fucking title together. I go on Bigger Pockets and I see all these fucks just talking shit.
Mm-hmm.
Right? All of them. So how do you deal with that? Like I've never seen, like you were attacked. Legit, you were attacked, bro. I was like, God damn. Like, do you even know this guy?
Did you read through the whole thing?
Yeah, I saw your comment and I was about, way to be a fucking professional. But I was just like, Jesus Christ, man. How'd you deal with that at the beginning? Because like that's attack at your character. Like that takes you back.
Yeah. And I think there's so first off, I don't have that many haters. I actually have most of the people that I interact with, and they know me, they like me, they're kind of part of my tribe. And if I have somebody who just hates blindly, so there's three levels. When I first got into kind of being a little bit of out there, being active on social media and all that kind of stuff. If somebody said something that was negative, dude, it would derail me. I wouldn't post again for 2 weeks. And I just kind of sit back thinking about it. It would eat me up inside. And I think that's probably the first level of, and really like the least mature level of response when you're dealing with this. Now we all go through it. Like I went through it and it adversely affected me for years. And then it came to a point where somebody would talk shit and I was confident enough in myself where I'd talk shit back and I'd be like, oh yeah, watch this, dude. Like, oh, dude, you're saying that because you're broke and because you're living in your mom's basement and whatever and eating Cheetos and blah, blah, blah. And then I'm like, dude, at the end of the day, then I realized that when you criticize somebody, whether you do the initial criticizing or you respond, dude, it's not the person being criticized that it reflects on. It reflects on the person doing the criticizing. So like that speaks to their character, not mine, dude. Them talking shit, they don't know anything about me. If you're the kind of person who just judges people without knowing anything about them, like that doesn't say bad things about me. That says bad things about you. Like you don't know who I am. You don't know what I stand for. You don't know my core values. We never hung out and had a beer and talked about life or business before. And so when I realized that, I was like, dude, I actually feel bad for these people. And now I just delete. So I think first layer is you get depressed and you kind of get standoffish. Second, you start talking shit back. The most mature level is, dude, you just remove, you eliminate. And not like I couldn't delete that because it's not on my social media, but it's out there in the world. And so
it's in the world. Like that's almost like I would sue these people for defamation like that.
Yeah. And dude, none of them know who I am, right? They're all like, I don't, probably another guru, right? Doing this, doing that. And if you read through the whole thing, that's really the only negative thing that I have heavily out there on social media that I know of, or on Google that I know of. But then, dude, I went in and I took a day to just kind of relax and compose myself and give a response. And so I responded to every single person who said something. And I only know one person on there who, by the way, dude, he's like, oh yeah, Tim Bratz never impressed me much. I had a couple business dealings with him and he was whatever. And like this guy came in, made an offer on one of my apartment buildings, by the way, said it was cash. I signed the letter of intent. I was like, all right, cool. And then he sends over a financing contingency and stuff. And I was like, dude, this isn't a cash offer. He's like, fuck you, man. I'm not playing games. I was like, what? Yeah, you are, And so that was that guy. Right. And so, I know that story. A lot of other people don't. I didn't throw him under the bus there. I will here though. but like this guy, I'm like, hey, no problem, man. Hit me up. If you got beef, let's talk through it. Like I've never done a deal with you other than when we were both young and early in the business and we both talked shit to each other. But dude, if you want to hop on a phone call and talk through it, let's hash it out like grown-ups. And then there were other people who said, and just speculated. And they don't know me. They don't know what my business model is. They speculate, they make up things because they heard it from somebody else. And I was like, no, that's actually not how I do deals. I don't do traditional syndication. I structure completely different. I pay my investors this way. I structure it this way. I don't take all these fees. I actually don't get, and so I just kind of explained it. And I was very methodical in how I respond to everybody's. And even the people there were a couple people who hopped in and they're like, dude, no, I know Bratz. I've been to his event. The dude's a rock star, da, 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 da. And I thank them in there. And then, dude, if you look at all the comments after I replied, there's people like, oh, this guy makes 90% of his money from actually doing deals over, 10% of his money that comes from coaching. Like, I'll take that guru over the one who makes 100% of their money from coaching. You know what I mean? Like every single day of the week.
Or you're fucking active. You're not a guru, bro. If you're active, if you're closing on that big of a deal, how are you a guru? Nobody talks shit on Robert Kiyosaki and his multi-million-dollar education company. That really puts people in the worst place. Right? Nobody talks about that shit. Yep.
And so, it's just all the people. And then all of a sudden, like my tribe kind of popped in and I, people Google search me, whatever. And they started popping in. They're like, dude, Bratz is legit. Bratz is the real deal. He's out there doing deals. I partnered with him on 400 deals last year. And like, so dude, it kind of takes care of itself. I think one of my mentors told me this: haters ain't creators. So that means two things. Them who are hating on you, they're not accomplishing anything, first of all. And two, if you hate back, that means it takes you away from revenue generating activity and going and doing big, cool stuff. And so it's a twofold type thing. Let them be, dude. Let them be judged by their comments about other people. And at the same time, don't go down that rabbit hole because again, it says more about their character than it says about your character. And if you go down that rabbit hole, it takes you away from going and accomplishing and making impact and doing things for your family. Yeah, exactly. And for your community and for others. So dude, I keep my head down, man. I don't really give a shit about the haters. If somebody jumps on my social media and talks smack, that's cool. If it's somebody who's like giving constructive criticism and feedback and asking like, why would you do that? Or playing devil's advocate in a respectful manner, dude, I love that. I love people thinking for themselves. And I would engage in that conversation saying, hey man, here's why I didn't do it that way. Here's why I don't think that's why I don't 100% agree with that. And I think that's cool. I think that's cool to see. I would never like just delete that person. But if somebody just comes on and they're like, oh, F you and blah, 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 and they're talking smack, I delete, I block them. And there's just not enough room. There's not enough brain calories in a day to spend on that shit. You know what I mean?
Bro, you handled it amazingly. I just wanted to see like what your thought process was because I think you handled it so professional.
Yeah, I appreciate it.
And I know people who know you, so I didn't even question it. So
I appreciate that, man.
Let's talk about what you did before getting into multifamily and why you made the pivot, right? Where most people hit that, and I've heard your story a little bit, to where you're doing the same shit over and over again. You run into the same bottlenecks. The dude's been doing it for 20 years. And then you're just like, bro, I got to do something else. So what were you doing and what really like made it click for you? Like, bro, I got to do something else.
Yeah, man. So I come from the residential world. I thought you get involved in real estate by becoming an agent. So I got my real estate license when I graduated from college back in 2007. Got a real estate license. I started brokering retail and office space for businesses and landlords. And so, partnered with a commercial brokerage somehow. And I didn't really know what I was doing, dude. I just kind of like, spammed a bunch of business owners. I was like, hey, we got this space over here, come and rent it. And that turned into, somebody with a friggin' ear piercing and tattoo shop that I represented, and like turned into a falafel shop, and turned into an Italian restaurant, and like just all these different types of businesses that I kind of got to meet. It was pretty cool. But I brokered a lease. It took me like 8 months to close my first deal when I started brokering. And I was just like, holy shit, I did the math on what the landlord was going to make over the next like 12 years of that lease term. And I was like, damn, I need to be owning real estate, because that's where the real residual income comes from. That's why I think a lot of us get involved in real estate in the first place.
Bro.
It's for the residual, like, dude, nobody wants to go and if I want to just trade my time for money, I'd go get a job. And, but we all think that we have to go and stockpile our own cash in order to then get into those residual income producing assets. And I think that's a belief that's stuck in our heads. That's imprinted pretty heavily. That's bullshit. And that is what you need to do in the residential. If you're buying single family houses, the bank wants to see Stratton's money in Stratton's bank account, sitting there for at least 90 days seasoned, before he can then go and use that for a down payment on one of his properties. In commercial, dude, different world. They expect you to go and raise the money from outside investors. They expect you to syndicate capital from outside investors and then use that as the down payment and as the operating capital. So it's a different mindset. So you have to really kind of reprogram yourself going from residential to commercial. But, I got into, wholesaling then. I got into flipping. And then I built up a little bit of a portfolio with some business partners, about 140 units from 2012 to 2015. That partnership ended up, kind of button heads. We ended up liquidating everything in 2016, but it really allowed me to go and do other stuff. So then I got into the turnkey space, and I was flipping 80 to 100 houses a year in turnkey, started a management company. And then I was kind of raising money and sponsoring loans for other investors that I knew down in the Southeast who were out and operating apartment buildings. And they bought up, I don't know, about 400 units. Probably about 300 units. And then I bought up like another 100 on my own up in Cleveland. And I had like 400 units in 2017. And I was on vacation. And, you get reflective on vacation. You're sitting out, and I'm overlooking this lake up in, I think we were up in New York or something at the time, upstate New York. And I'm doing my net worth before everybody wakes up. I'm having some coffee, and I'm just like, I wonder how I could work smarter instead of harder. And I'm realizing 90% of my net worth came from my apartment buildings. And it was really only like 10% of my time. And so I'm like, dude, what if we pivoted? What if I told my acquisitions guy that we're no longer buying houses, that we're only buying apartments? What if I told my project manager he's no longer flipping house or like renovating houses, he's only renovating apartments? What if I told my dispo guy, instead of selling houses, you're gonna be asset managing apartments? And we already had a management company, and because we flip a turnkey house and we take management in house. And so I had my COO, and dude, I came back from vacation on Monday. I was like, we're only doing apartments now. Like, that's it. Draw a line in the sand. Whatever's in the pipeline, we'll finish, but we're only taking down apartments, dude. And you know what happens? The universe responds when you burn the ships like that. And the next apartment building was an 11 unit that we were able to, it needed more work than we wanted to put in for 11 units. So we wholesaled it off, netted $87,000 like 45 days later. And I'm like, dude, this is what I'm talking about. And this is 2017, when our turnkey houses, we'd profit like $8,000 to $10,000. It was before like really the market was going crazy. Yeah. So, dude, we were doing a lot of numbers, but we weren't netting a lot of money because it was before the market really started taking off. So it made total sense to jump into apartments immediately. And the next was I think it was about 15 unit that we ended up buying, and flipped it in, 4 months, and made it was I think 90 to 120 days, somewhere in that ballpark. We made $150,000 on that. And then it took down a 20 unit. Then I took down another 24 units. Then I took down another 24 unit. Then I took down a 48 unit. And we just kind of kept on growing. And in 2018, I had, like 600 units in early 2018. And a portfolio of 5 buildings came across my desk that was 730 units. And we were able to take that thing down. It was a big deal. And that's kind of really what put me on the map of, oh my God, this guy's got over 1,000 doors. And that's when kind of the people started hitting me up saying, hey man, will you coach? Will you mentor? Yeah. And that's what led to my commercial empire type stuff, which is my coaching platform. But the reason I do that isn't like, hey, it's cool. I like the engagement. I actually really like teaching. My mom was a teacher, and I like the give back. But selfishly, it also leads to more deals. It also leads to more money. It leads to being able to get engaged and help other people. Like, dude, the deal that I'm closing on today came from somebody who came through my coaching, and he's capable. He found a great deal. He knows how to renovate it. He knows how to asset manage it. He needed a balance sheet, somebody with a big balance sheet to sponsor the loan. And he needs some help raising some capital. And he wants somebody to hold their hand through the deal because it's a big ass deal. So my team's going to help out with some of the asset management. And then we raise some money. I sponsored the loan. And then I have in-house attorney now. So he helped out with a bunch of the legal side of things. And we got a chunk of the deal, of a big deal. He got into a deal he couldn't have gotten into before. I got into a deal that I wouldn't have gotten into without him. Right. And so all of a sudden, 1 + 1 = 3. We can accomplish more as a team, as a group, than we can as individuals.
Well, I mean, I pay for the hand holding, bro. Like, I don't know how to do this.
Yeah.
Take my money. Show me how to do this. Like, let's walk through this. Like, let's both make money together. And then you're going to eliminate your learning curve, for lack of better words. Like, it's just gone. You have the person there. You have them there, ask the questions like, hey, what do we do here? And then you feel so much more confident when the next one comes up.
For sure. Dude, everybody worried about like, well, what about this deal? Like, I need as much equity, and they get greedy. And that's like a very scarcity mindset. I think a lot of the single family side, because dude, if you don't have a big chunk of a single family deal, man, like who wants to carve up 20 grand and only get 25% of it? Well, like, I'm not that interested, right? It doesn't excite A players anyways. But like, if you look at a big build like this, dude, the dude who set the whole thing up, he's going to increase his net worth by $7.5 million. He can go sponsor big ass loans now that he couldn't. So it's not about this deal. It's about, what does this deal lead to? How many other deals can you take down because you took this deal down? And I think if you have a long-term mindset, which you have to have in real estate, if you have a long-term mindset, you're not focused on this deal. You're focused on, how does this deal set me up for the next 10, 50, 100 deals that I can do? And that's the mindset that I had early on. Like, I gave up that partnership that went south, those 140 doors that we worked up, or that we acquired. I gave up 67% of those, and we had flipped a whole bunch of another 100, 150 units on top of that. And so like, I gave up 67% of the first 300 units that I bought, just because I knew it set me up from a portfolio standpoint, from an experience standpoint, from a posture and confidence standpoint for the next 300, 3,000, 30,000 units that I'm going to buy.
Well, how important is that? The confidence thing, bro. Confidence is 90% of it.
For sure. Just have the balls, man. Like, dude, I know people, like, I'm in commercial real estate, right? I know people who are not any smarter than you, me, or anybody else that we hang out with and we meet on the street. It's just, dude, they just either don't give a shit, or they're so confident that they're willing to get into big deals. They just think at a bigger level. And when you play with dollars, you're going to earn dollars. If you play with thousands, you're going to earn thousands. If you play with millions, dude, you earn millions and millions of dollars. It's just adding zeros to it.
Love it, dude. I think one thing that people don't realize is what you did beforehand to even like get you ready, right? It's not like you just did this shit overnight.
Yeah.
Right? You were doing so much other stuff, and then when the opportunity bared itself, then you could really take that next step forward. And then again, you waited, groomed yourself, and then you took that next step forward. It's not like you just, oh yeah, well, I own 4,000 units I did in 2 years. I don't see the previous 30 years of shit you went through.
Dude, I started in 2009. I bought my first property. I was just brokering or in construction or interning for home builders for 4 years prior to that, from 2005 to 2009. And then 2009, I picked up my first house. I didn't buy my first apartment until 2012. I pressed the reset button in 2015 with when that partnership went south. And so I built my portfolio from 2015 to today. So 5.5 years, 4,800 doors. And so it looks like overnight success. But the reality is I was really shitty at real estate for like 7 years before I got good at it about 3, 4, 5 years ago. You know what I mean? So it takes a lot. And I lost money and I screwed up, but I screwed up on smaller deals, which kind of set me up for, do better on big deals. But at the same time, you don't have to do it that way. You don't have to organic, like you can partner up exactly like you just said and learn on somebody else's, by bringing them in to say, hey, let me kick you some equity. Let me kick you a consulting fee or whatever in order to make sure that I don't screw up this big deal that I'm going to take down. And that way you can jump into bigger deals sooner. And dude, you don't have to spend 9 years screwing up before you can jump into a 100 unit or a 500 unit apartment building.
So where are you going to learn now? Like, where are you going to grow? Like, where are you going to find these people that are going to help you get to the extra zero on that net worth?
Yeah. So here's the cool thing about apartments is once you know how to do $1 million deal, dude, you can do a $10 million deal and you can do a $100 million deal. It's all the exact same like principles for the most part. So now it's just like how many can you do? How many deals can you source? How much money can you raise? And how can you make sure that your team doesn't screw it up, right? And so that way you can keep the property. So like, dude, if I didn't learn, my current level of knowledge could build $1 billion portfolio that I can then pay off over the next 30 years. And, you know, if I own 30% of it on average, I mean, my net worth is, I don't know, probably around $500 million 30 years from now. You know what I mean? So like, that's a pretty cool situation to be in, knowing that I can get to there. But to your point, I'm looking at new things. I'm trying to surround myself with bigger business owners. Do masterminds. You know, there's a lot of different masterminds out there that are both entrepreneurial related or real estate related. Real estate's, there's a lot because there's a lot of money to be made in real estate. So it's there's a lot of masterminds around it. You know, they don't have it for you know, people who run a gym because there's not that much money in running a gym, you know. Yep. But in real estate, you can make a lot of money as a solopreneur, and you spend $20,000-$30,000 a year on a mastermind. You get around higher level thinkers, you get around new resources, access to capital, access to different types of deal flow, and just keep on leveling up. So there's a lot of different mastermind groups. I'm in 5 different masterminds. Some of them are for me. Some of them are for my team. I run 2 different mastermind groups. And dude, I'm trying to surround myself with all 8-figure and 9-figure entrepreneurs, people who have actually exited big companies. That's who I'm trying to surround myself with now for 9 figures or more. And that's $100 million plus. If they've exited for that much, that means they know how to build a company to sell it. That means they know, you know, how to find institutional money to come in and buy you out. I'm looking at doing things like once I get to $1 billion to $2 billion in assets, I'm trying to get to $1 billion within the next 24 months. I'm at 400 million after this deal closes, about 410 million. So I think I can get there maybe by the end of next year. Yeah, let's give it 24 months though. And then get to 2 billion. Then, dude, then it's exciting because you can essentially go public and you can take your fund public or your entire portfolio public. And dude, it like almost doubles the valuation because the traditional public, they want a 3 to 4% return on their investment. You know what I mean?
Would that be a REIT?
Yeah. Yeah. So I'd make it a real estate trust and I go public with the REIT.
Wow.
So I think that's probably on the 5-year horizon is kind of where my head's at. But then dude, real estate's cool. But if I buy a $20 million building, I can make it worth $25 to $28 million. But dude, I could also buy a $20 million company and make it $100 million in the same 3 to 5 year time frame. So that's another thing I'm looking at is like buying 7 and 8 figure companies and then turning them into 8 and 9 figure companies and then exiting those. I think that's a little bit of a distraction right now. But once I got to get to $1 billion in assets, and then I'm probably gonna start looking at something like that too.
I love that. You can tell you're in that DM mindset.
Yeah. He's my boy. Like Mark Evans is a good friend of mine, and we go on vacation together and all that stuff, and just kind of like going out doing deals, talking about that thing. I think we can get a little scatterbrained as entrepreneurs, looking at all these different like opportunities and chasing shiny dollars, and dude, like these e-commerce stores that popped up. And dude, I know buddies who are making a lot of money selling friggin' baseball cards right now. I know people who sell in e-commerce stores. I know people crushing it in Bitcoin, but you can't control Bitcoin the way that you can control a business or you can control real estate. So it's just not, I don't know. It's more of a speculative play. And I would rather have, a lot of people say, hey, I want return on investment. I want return of investment. Like that is more important to me than necessarily the return on investment. Is you never, ever lose principal. And that's, will people get rich quick? Yeah, but I think they can also lose a shitload of money faster than I ever would. And I will definitely get wildly wealthy. It'll just take maybe a little bit more time. And you just got to keep your head down, man. Not look left, not look right. Commit to whatever you want to do for 3 to 5 years. And dude, I don't think people have any idea how quickly things can compound in 3 to 5 years if you just put your head down and get to work. It's but you gotta be smart. You gotta be reflective. You have to like look at what you're doing, the right things. You got to eliminate the bad things, do more of the correct things, and just, dude, you keep on being aware of what's going on in your business. And again, surround yourself with awesome team members is one of the things that I kind of fell into and lucked out with, because my team is just rock star, dude. I got a great organization who helped me be able to go and do more stuff because they take all the day-to-day stuff off my plate.
And how are you risk mitigation? What are you doing to analyze that stuff? Because that's the biggest thing most investors talk about, right? Once you get bigger, they're like, I just don't want to lose fucking money. Mm-hmm. If I can not lose money, I know I'm going to be successful.
Yeah, man. So from a real estate perspective, you got to buy at a low enough basis. If you buy at a wholesale price or a discount of some sort, then you're able to screw up a lot and still be okay. Second thing is I'm buying cash flowing properties. So even if I screw up, worst case scenario, I can sit on these properties and let them cash flow, pay down principal, appreciate naturally over time, and eventually, they'll balance back out. I don't speculate on appreciation anymore. I used to, right?
Okay.
But I don't do that anymore. I force appreciation. So if I buy something, I'm looking for something distressed. I'm looking for something that's physically distressed, managerially distressed, where I can come in, put some sweat equity into it and increase appreciation instead of just kind of, oh yeah, the market's going to appreciate by 5% every year for the next 5 years. And I'm going to sell it for this huge gain in 5 years from now. Dude, we could have a different president 5 years from now. We could be in a recession 5 years from now. We could have a total market collapse. Fucking COVID could still be happening. We could be in a world war. Like, who knows? So I don't speculate, dude. If I can buy at a deep enough discount, create appreciation by sweat equity, and then buy for cash flow, I think those are 3 of the biggest risk mitigators that you can do in real estate. You could still go and flip houses. If you're going to flip houses, I just wouldn't get into luxury type stuff. I would stick to that worst case scenario, $250,000, $300,000 house that'll rent for $2,500 to $3,000 a month. So if shit hits the fan, you can at least rent it out, cover your debt service, cover your operating expenses, and then ride out the storm. I also don't think it's anything like 2008, dude, where it was easy access to capital. It was fake money. It was people who shouldn't be in real estate doing real estate. Now it's just, dude, there's real demand. Like there's a shortage of supply. There's a huge demand. Money's cheap and just creates, inflationary pricing. Or appreciation. So that's what happens, dude. Prices go up. And I don't think it's going to be like that. The other thing is there's boatloads of money on the sidelines right now. And there's so much money on the sidelines that even if prices drop by 10%, dude, all this money from the sidelines can be coming in. It's going to bump prices right back up. So I think there's a little bit of a cushion there. So that's from a real estate standpoint. From a personal standpoint, what am I doing? I'm looking for non-recourse loans. I'm looking for advantageous loan terms. I'm never going to put myself in a position where I'm painting myself into a corner and I have to refinance or I have to sell because this loan's coming due. I'm putting non-recourse debt in place so that way I'm not personally guaranteeing that. I signed some carve outs so that way I'm not lying, cheating, stealing, grossly negligent. Like they can still come after you for that stuff, but fortunately we don't do any of those things, so that's good. And then, from a personal estate planning standpoint, I have trusts set up. My houses are in trusts. They're, once I get a little bit more liquid, I'm just going to pay off all those houses and put them in irrevocable trusts. So that way nobody can ever access them. They're essentially immune to debt. And I'll put my kids will always have a $4 million beach house, and they're going to have another $5 million mountain house. And they'll have another, so at least they're always going to have a nice place to live. Right. Uh-huh. And that, just kind of setting yourself up as you increase your net worth. You want to increase some of those safety nets. A lot of people do a lot of things with like life insurance. I'm sure I'll do more of that. I can't wrap my head around some of the life insurance stuff right now. I just can't sit down, and I'll earn a better return investing in real estate than I can in life insurance. So yeah, I have like term policies. I know a lot of buddies with like universal policies. I know some really wealthy people who have big policies too. And I don't know. I don't like putting $50,000 a year into a universal policy and the face value is only like $4,000, and then like, oh, but it catches up in 10 years. Like, I don't know. I'd rather have a big ass term policy and then take the other $45,000, roll it into real estate or other assets, and then just, keep on growing that way. So, you start doing things a little bit more in like a self-directed IRA or a self-directed 401k. I'm starting to do a little bit more in like my kids' IRA and Coverdell educational accounts and stuff, like, start doing stuff like that, and reduce the tax liability, defer taxes, or eliminate tax gains on some of that stuff. And, just kind of getting into better assets, getting into longer term holds, not doing any more C-class type stuff or D. Like, I don't do any D-class, but just doing nicer stuff.
Well, I wanted to talk to you about, when do you stop buying distressed? Right. Like, at what point do you move into just, I'm buying really nice assets, like the Grant Cardone model, where I'm buying just nice assets, they cash flow instead of distress?
I think I'll always look for opportunistic deals in addition to maybe some stabilized stuff. There's definitely a class of investor who like the Grant Cardone super luxury, $400,000 a unit, but only rents for $2,500 a month. Like, in what real estate investing world do those numbers work? They just don't. But here's where he's got it. It's like an annuity, dude. It's like a bond. It's never going to lose value. A $400,000 luxury apartment in Boca Raton will never lose value. It will always maintain its value, being in that primary of a market, in that beautiful of a location, oceanfront. But he's never going to make more than friggin' 4% on it, 3% on it. But if you got FU money, and you can deploy tens of millions of dollars, and it's not his money, dude. He's raising it from funds. He white labeled a fund to a bunch of other people who just want to say that they invest with Grant Cardone, and that they're okay with a 4% return on investment. And so, here's the thing, dude. He's overpaying. Like, I'm talking about a deal that he took down for like $160 million a couple of months ago, and there's no chance I would have paid more than like $100 million for that deal.
Oh, okay.
But he's got cheap access to capital, and he doesn't have to repay his investors. My investors have kind of been trained to get their money back every 36 months because I do the burn method.
Yeah.
I buy, renovate, rent, refinance, and then pay them back, and then I roll it forward, rinse and repeat. So I've kind of trained my investors to get their money back every 3 years or so. So it's hard for me to then retrain them and say, hey, you're not going to get your money back for 10 years. Yeah. Where Grant Cardone's like, hey, your money's sitting here for the next 10 years. It's better than sitting in a CD, and it's backed by prime real estate. It's just a different conversation. It's a different type of investor. And I'm sure there's some investors that I could raise a lot of money from for that model. I just haven't gone down that road yet. I'm in the process of I'm selling off a lot of my C class type stuff. I'm only keeping my A and B class type stuff. And I'm keeping everything that's over 100 units. I'm selling everything that's under 100 units. So I'm gonna let go of probably about 2,000 doors. It's kind of what my thought process is over the course of this year. And that way, it's gonna be like a step back in order to take a couple leaps forward. Yeah, and maybe in that new model, maybe in that next leap forward is going to be stabilized A plus type property, along with still doing some distressed, but in good areas. Just like you look for houses in the worst house in the best block, I'm looking for the worst building in the best neighborhood or the best city. So I don't really care what the property looks like. I can always change that, but what you cannot change is the location.
So when you sell off that many units, like, are you doing 1031s on all these things? Like, is it different at that level?
Yeah, I mean, you could. It's just you got a lot of investors, and here's the thing: it's my decision, right? If we want to sell it and want to 1031 it, we could do that. If we want to sell it and not 1031 it, we could do that too. On these properties, just because of kind of like, it's just some nuances from how we acquired the deal and stuff. We're not going to do 1031s. I want to get a little bit more liquid. Okay. I have liquidity, but just not, like as a percentage of my net worth, it should be more. Like, I want to be more liquid than I am right now. I'm like most real estate investors, dude. Like you go through these feast and famine cycles of how much cash you have versus how much equity you have. And, you got all this equity in a deal, and then you sell it and you get cash heavy. And then we get nervous sitting on that much cash, like, dude, redeploy, right? And then all of a sudden you're like, oh shit, I redeployed too much. And now I'm like, fuck, now I'm scrambling for cash. I have, so like I have a lot of money, multiple 8 figures of equity in deals. And, you know, I have 7 figures liquid, but I want 8 figures liquid. You know what I mean?
Mhm.
And so I'm going to go through, because of where I am personally, that's going to help me build just a moat around me and my family to have, you know, 10, 15 million bucks liquid, and then still have multiple 8 figures of equity in deals. But that, you know, dude, it just kind of gives you some peace of mind. It's almost that level where, dude, you know, everything's taken care of, you know, like you can't fall and screw up too bad. And now you can kind of get ambitious. You get like really excited and know that like everything's in good shape no matter what. And so it's kind of where I am just personally in my journey right now.
Oh, I fucking love it. So what makes and we're low-key running out of time, but I have so many questions for you. I'll try and make them fast.
Yeah, man.
What makes your deal structure so much better? I talked to Nick about it, and I love the way you do it.
Yeah.
So you want to explain that a little bit?
Yeah, high level. So again, I come from single family. I never read a book on this stuff. I never attended a seminar on commercial real estate. I never, you know, took a class or anything like that. So I just took the same model that I knew in single family and I duplicated it in multifamily. And so I you know, would buy an apartment building and I'd pay a kind of I realized early on that there's 2 types of lenders. There's lenders that lend based on debt, which say, hey, I just want predictable cash flow. Pay me 10, 12, 15% per year. But then they don't have any equity in the deal. There's no upside in that opportunity. And then there's equity investors who have equity upside and potential, but they also have equity downside, right? And there's no predictable cash flow. Those are the 2 different types of investments that people can put their money into. And there's nothing that kind of like combines the 2 of them. Being in the turnkey space, a lot of people wanted that predictable cash flow, but they didn't want to do any work and they wanted equity upside. That's why they buy turnkey single family houses. So when I got into multifamily, I was like, dude, why don't I just kind of structure it where I pay them a fixed return and then I kick them a little bit of equity in the deal forever. So when they get all their money back, they still have equity and they still can earn appreciation. They can still earn cash flow. They can still have depreciation, and they have future equity or future sales proceeds or refinance proceeds or whatever else. And that's what I ended up doing. So I don't nickel and dime on fees. We take like a pretty nominal acquisition fee, and I just started doing that. I've only done that in probably like a quarter of the deals that I've done. But there's real costs now. I have like a real team. There's overhead. So like you got to do it, you know? And I would suggest everybody take an acquisition fee, but I don't think you need to nickel and dime it on all the other fees that I see a lot of syndicators doing. And so what I do is you know, bring in the investors, pay them a fixed return. And then when they get all their money back, they typically the investor pool keeps around 25% of the deal forever. And so they get 25% of cash flow, 25% of depreciation, 25% of future sales proceeds. And it's a sweet deal for them, dude. They got a great return. We pay 8 to 10% on the money while it's invested, and then they get all their money back in 36 months. Fucking 10% is a respectable return on its own. Then they still have equity. They still have refi proceeds. They still have cash flow. They still have all this other stuff. So then they get these you know, cash flow annuity payments on a quarterly basis, and then they get these big chunks of refi proceeds or sales proceeds whenever those types of events occur. So it's just different than traditional syndication. Traditional syndication, the equity investor, they'll bring all the money, and then the operator, right, the person sitting in my seat, would take all sorts of fees on the front end. The operator only gets a little percent of the equity in the deal. So it's like flip. The operator might only get 25%. The equity investor gets 75%. And on the surface, it looks better for the equity investor. But the reality is the operator's taking a bunch of cash off the table on the front end. And then the equity investor only gets paid if the property's performing. So if it's not cash flowing, like, dude, I'm in traditional syndications where I haven't gotten a check in 3 years now. Dude, the property's not performing. You know, do we expect cash flow in 6 months or 12 months or whatever? And I'm like, damn, dude. So it's a different type of a model. And you might think, oh, you know, I have more equity, but the reality is your money is invested longer, 5 to 10 years instead of 2 to 3 years. And so, you know, in one deal over here in a traditional equity investment, I can get somebody in 2 or 3 deals. And so if I can get you into 3 deals in the same 7-year period as one deal over here, you got the same amount of equity, right? Like you got 25% of 3 deals instead of 75% of 1 deal, and you got paid the entire time, and you got all your money back, and you're still holding the deal, and you still have equity in the deal. Versus a traditional syndication, they're only getting paid if the property's performing, and typically in a traditional syndication, they have to sell the deal in order to get the investor paid back because they're not buying at a discount, they're not forcing appreciation, and so like, all right, great. So you might have 75% and you get paid, but you got a job, dude. You got to go and do it again in order to get paid again. And at the end of the day, man, you're not in the same boat rowing in the same direction as the operator. I want everybody in the same boat rowing in the same direction. And so like I get paid and I start taking more money off the table from refinance proceeds and cash flow. I start taking money off the table at that time when the investors get all their money back. So it just kind of, dude, it just aligns everybody. You know what I mean?
And that's powerful. So how did you build out your team? And you've talked a little bit about like, I just want multiple deals with multiple partners and I don't want a massive corporate overhead. So how'd you go about that?
Yeah, I think, so I actually just released a video on YouTube on this about the 4 levels of business, the 4 financial levels. The first is 0 to $1 million. And that's like proof of concept phase. Can I actually make money doing this? And 96% of businesses fall on that. Then there's $1 million to $10 million. $1 million to $10 million, about 3.6% of businesses fall in that stage. That's cool because you got a business, but it's really tough because you're not generating enough cash flow to like bring on multiple 6-figure talents to come and run your organization. Like build out like a C-suite of COO, CFO, and CMO and all these people. So you're like, shit, dude, how do I do that? And when I was going through this hell zone, I was like, I need to fucking get to 8 figures a year in business revenue in order to make this make sense. What I figured out is I could bring in joint venture partners. And that way they get paid from equity in deals, not from Tim's salary. So I had to give up equity, but it goes back to our conversation earlier is it sets me up for doing way more deals, right? So I had to give up some equity on the front end to some of these joint venture partners, but it sets me up and gets me out of that hell zone, makes me more liquid. I can get into more deals, it builds my balance sheet. And then I don't have to give up as much equity on future deals if I don't want, So it allowed me to bring on A-player joint venture partners who could source deals, operate the deals, be joint venture partner, be kind of accountability partners, local to the projects, oversee project management, property management, come in, kick the table. What the hell? How come things aren't leased up more? And partner up with amazing talents, but not have to bring them onto my overhead, bring them onto my payroll. So it allowed me to punch through that 8-figure mark, that $10 million mark, and get to multiple 8 figures a year in gross revenue now, just because I was able to do that. So now I can still joint venture, and we still do. Like on this deal, we're joint venturing. But when somebody brings me a deal, I can also say, hey, let me just pay you a fee. Let me just kick you some equity for bringing that deal over. If they're competent and they're confident and they're capable of overseeing project management, we'll give them that responsibility as well. But it just kind of depends on the deal by deal basis.
Okay. And then, so what does your day look like? What time you wake up? What do you do when you wake up? How much time you spend with your family? Because you're a high level operator, and then there's the stigma of a high level operator and what they do, and how they're shitty family people or how they're shitty people, right?
Yeah, for sure. So I am very aware, I think. Is kind of one of the things I'm always reflective, but I'm not like lazy. I'm always looking at my situation. A couple of years ago, my daughter comes up to me. She's tugging on my shirt. She's 2 years old at the time. Tugging on my shirt after dinner. She's like, Daddy, come play with me in the playroom. I'm texting on my phone. She's like, Daddy. And I'm like, all right, baby, why don't you go over there and play, and I'll be right over. And I finish the text. And I look at my daughter playing by herself in the playroom during family time after dinner. And I look down at the text message. I'm like, dude, this isn't important, and it's not urgent either. I'm like, what the fuck? Like, what kind of dad am I going to be if I keep on instilling these thoughts into my daughter all the time? And dude, she comes to me. She doesn't even know it yet, right? But I'm imprinting in her that instead of coming to daddy for love and affection and attention and appreciation and all these things, now she goes to daddy and she gets rejected. She gets, the phone's more important. She gets, she's sad and gets deflected and all these other things. And I'm like, dude, how many times do I have to do this before that really like imprints in her? And then all of a sudden she becomes a teenager and she's just dating dickhead guys who treat her like that, right? And instead of dating the guy who holds the door and treats her with respect, she dates the guy who cheats on her and treats her like shit and talks down to her and like, dude, I don't want to be the guy whose daughter becomes a stripper, right? Like that's like I heard Chris Rock say one time, like, they don't give dads report cards, but if your daughter's a stripper, you messed up, right? So like, I think about this, right? And I'm like, I cannot be, and I just love spending time with the family. So, I look at my calendar the next day after I think through this whole thing, and like I got this pit in my stomach, like what the hell kind of dad am I being right now? When my little baby girl wants to play during family time. And so I look at my calendar and I'm like, I crossed off everything that I had scheduled for the next day. And we're going to do a family day. We're going to go to the zoo. We're going to go hang out. And I realized during that process that, I had all these like calendar events in my book of saying, hey, I'm going to time block. What's up, DM?
What's going on, Mark?
I'm going to time block for, a meeting. I'm going to time block for this podcast. I'm going to time block for this coffee thing, or I'm time block to meet with my team. And like, I'm time blocking for business. How come I don't time block for my family? And that's when I started time blocking for my family. So I took essentially from 4:00 until the evening, every single day is time blocked for family time. I don't take any phone calls. Now, dude, am I perfect? No, I'm not perfect with it. I definitely screwed up a lot. Like during this whole process, as we're closing this big ass deal, like I was on phone calls until 11 o'clock last night and all sorts of jazz. But when I'm there, I am present, right? And I try to time block as much time as possible for the family. I try not to work on the weekends. We used to do something that was called Friday Family Fun Day, where, my daughter would pick, do we go to the zoo? Are we going to go to the playground? Are we going to go to the museum? Are we just going to picnic? And do whatever she wanted. Friday Family Fun Day. And we, it's fun to say and stuff. And we goof around. She's in school now. She's in kindergarten. So we don't do it anymore. But she does like some virtual learning days and stuff like that. We'll go and do fun stuff. Saturday, Sunday, I try not to touch the phone. Evenings, I try not to touch the phone. And I try to put it in a different room. I try to keep it away. Because we can all, dude, as soon as it starts beeping, you hear the buzz over in the other room. You're like, oh, damn.
There's money on the other side.
Yeah.
There's money on the other side of the phone.
And what I realized is when I started telling people like, hey, I'm time blocking, hey, I can't be on a pod. Like I'm actually on a podcast late night tonight, but that's because my wife and I switch off on putting the kids to bed each night. So I put the kids to bed last night. She gets tonight. I put the kids to bed tomorrow night, and it gives each of us a night off. And on my night off, I'm allowed to, keep on doing like late night podcasts or do whatever. So I'm actually on a podcast tonight, but usually I cancel, speaking events or, podcasts or anything that I do after 4:00 because I'm like, hey, I'm sorry, I can't. I'm double booked. I have a commitment with someone already. It's my family. I have a date with my kids. I have a date with my wife. And so I think it's really important that, and something that I realized was when I told people that, they respected me more. And two things happened. When I went to work, I was more efficient when I worked. I got shit done. I was much more productive because I had 6 hours to work on 4 days a week. So like I had to get 60 hours of work in 24 hours. So I was very attentive to the things that actually mattered and the things that actually got results. So that was better. And the second thing was, dude, my chief investment officer actually hit me up when he was still my attorney. He was like, dude, I respect the shit out of that. Like, I want to do more business with you because you respect relationships. It's not just about making money. And so, and I have multiple people say that to me. It's like, dude, I do business with you because you're a good dude, because you're relationship driven, not transactionally driven. And it allows me to, I think, do more business because people know that you're not just chasing the almighty dollar. So now I time block in the morning. To answer your question now, I time block in the morning. I wake up at 6:30 pretty much every day. My daughter gets ready for school 6:30 to 7. She goes off to school at 7 o'clock. And then, I'll hang out with my son, who's always up like right around that same time, and for about a half an hour. And then I head out to the gym. I work out from 8 to 9. 9 o'clock, I come back, get cleaned up, and then I'm off with the day. So, I'll hang out and have breakfast with my son or with my wife and hang out for like an hour. But then I'm out the door usually at 10 o'clock. I'm working from 10 usually to around 4 o'clock. And, typically my time is best spent doing really non-quantifiable things now. It used to be just the revenue generating shit, which used to be sourcing deals and raising money. And I still do a little bit of raising money just because I love it. And really like leading the team and painting the vision for the team.
How do you paint that? Well, I'll ask about that because that's
Yeah.
my last one.
Yeah. And then, so like the things that matter in real estate are sourcing deals, raising money, refining operations, right? If you're not doing those three things, you're not being productive in real estate. So what I found is I put somebody in charge of acquisitions, I put somebody in charge of money, and I put somebody in charge of operations. So now the non-quantifiable things for me is being on a podcast. I don't know what could come from this. I might do a deal with you. I might do a deal with somebody who watches, who knows? But I'm doing things that really are like one-to-many activities that are multiplier type of activities that get exposure, right? And I'm cool doing this kind of stuff and, doing social media for free because I don't know what could come from it. If somebody wants one-on-one attention, otherwise they need to pay or be a part of like one of my masterminds kind of a thing. It's kind of like how I've differentiated the two. So, but I try to give as much value as I possibly can for free on social media because it's a one-to-many type medium. So, during that 10 to 4 o'clock range, I'm either creating content, I'm helping out with leading the team and really being the fuel that feeds each of those engines, which is the deals, the money, and the operations. So that is best spent for me by being on podcasts and creating social media content. So that's what I typically do. As I'm needed for other stuff, like as I've been needed for this deal, signing loan documents and different type of legal type garbage and stuff like that. I'm the one who signs all the docs, so I got to be that person. And then try to 4 o'clock. I try to shut it down. It's been kind of 4 or 5 o'clock recently, and then I go and have dinner with the fam and hang out. We play some puzzles. My little guy loves puzzles. My daughter loves all the different kinds of movies and stuff, and just playing. We go out on the beach and try to run around and do that. Have family dinner, and then we put the kids to bed. And then I chill out, usually watch a movie on my night, like off for putting the kids down to bed. And dude, that's it, man. So it's not anything too earth shattering, but that's typically what I spend my time on.
I love it. And how do you paint that vision for your company? That's one thing that I need to get so much better at is painting it and then enforcing it every single day so they know where we're going and they're just not doing the task. They're doing the task for something bigger.
Yeah, man. And I think, if you haven't sat down with your team, I always thought like core values were one of those things that's on Google's wall just for like PR purposes.
Nonsense.
It's a real thing. And I brought somebody in about 3.5 years ago, something like that. An HR guy, consultant, comes in and we developed core values for our company as a team, and it got buy-in from everybody. Like that way. It wasn't like Tim's company and Tim's dictating, here's what the rules are. It was like, here's what we believe in as a company. Fucking show up and own your role. Like, I don't care if you are walking a property, you see litter, you go and pick it up and you throw it in the garbage, dude. You don't go and call a maintenance guy to do that, to then drive across town, pick up fucking trash and throw it. Like, you have an ownership mentality. Like, that's a big core value of ours. Lifestyle and work hard, play hard is a big type of thing. So like, we're out doing fun stuff. We, pretty much everybody from my core investment team is also involved in my educational side. So they all come out. We do masterminds 4 or 5 times a year. It's a bang out, awesome time. We work our asses off. Like, dude, last night when I told you we were on messages, it was text messages with my entire team and emails with my entire team until 11:15. And somebody's like, dude, just wanted to let you guys know, proud to be in business with you guys. You guys are all hustlers. Like, we get shit done because all of us are working at 11:15 at night, and I don't try to do that. I don't want everybody working, but when deal needs to get done, dude, I need everybody with buying in and doing their role. And so, on the other days, dude, cut out at fucking 2 o'clock and go play golf. I don't care. You know what I mean?
Just get your job done.
Yeah, if you want to go exactly, just get your job done. But if things start slacking because you're abusing it, that's not okay at the same time. If other people need to carry your weight because you're abusing the freedom that we're giving you, that's not okay. And the core values are something that everybody's got buy-in. And so that way everybody does buy in. But then when they see somebody who doesn't buy in, and you as the leader you need to like chop it right then and there, because otherwise they think that they don't have to follow the rules either. And it's one of those things, man. You got to have keep the core values as almost like gospel, dude, in your business, where like everybody abides by it, everybody lives by it. It helps them guide them on making good decisions on what they're going to do with the business when you can't be there to answer that, or when a tough decision happens, and you got to swallow your pride and do the right thing. Dude, that's a or lose money, like that's not easy to do, but you got to do the right thing, which is one of our other core values. So, like I think that is a big deal. So it gets buy-in. And then once you have buy-in, dude, I goal set with my team. I want to know what their personal goals are. I want to know what their business goals are at the end of the year. And then I share what my personal and my business goals are as well. So that way it's completely transparent with my core, my executive team essentially. And that way they know where we're going. And then, dude, we fucking obsess over it, right? Like, so we obsess, and we make all of our passwords for all of our accounts essentially what our goal is. Make like, so like everybody is just like, oh, dude, so they're always thinking about it. Every time they log into anything, they have to think about, all right, this is the goal, this is the goal, this is the goal. And dude, we're talking about it all the time. We're at masterminds. I have the mastermind for other people, but I bring my team because then they're exposed to all of it too. And they get the growth, and dude, like everybody thinks that people are only driven by money. No, a lot of people are driven by growth. A lot of people are driven by achievement. A lot of people are driven by personal growth. A lot of people are driven by giving back. A lot of people are driven by helping other people. A lot of people are driven by the fun aspect. They'll take less money just to go and party with you and hang out, so you gotta implement all those things into everything that you do. And I make sure that we work hard, we play hard, we set the vision, we obsess over the vision. I'm so obsessive over things that it spills over into my team as well. And they know what their goals are, man. And they obsess over it, and they think, and we all know, hey, if we hit this number, every single box is checked for every single one of us, and it means we're making a big impact. And they all know that if you help enough other people get what they want, you will always have what you want. So we know that if we help enough other people, we're going to get what we want. And we know that if we get what we want, that means we helped a lot of other people, which is, a feel-good aspect of it too. But I think the big thing, man, is just being transparent with your team, saying, hey, man, here's where I want to go. But I'm also very like, dude, I don't try to keep like all those executives on my team. They all have either equity or profit share or some sort of like revenue share on how the business does, because I want them financially driven as well. Everybody gets like a base salary, and then they get some sort of equity or profit share, or they can invest into equity over time in all of our deals and the education business and everything. I don't want to have 100% of the grape. If you own 100% of a grape, that means you got to do 100% of the work. And there's not that much juice in the squeeze of 100% of a grape. I would rather own a quarter or 50% of a watermelon, where other people are doing the shit that I don't want to do because it drives them, and that's like more of their type of behavioral type. I can go and focus on doing the stuff that I like doing because it drives me and I actually like doing it. So I'm then better at it. They're then better at their job because they don't have to do the shit that they don't like doing, which I do like doing, and we just kind of complement each other. And all of a sudden, like I said before, man, 1 + 1 = 3. We can accomplish way more as a group than we can as the sum of the parts kind of a thing. So, somebody asked me the other day, hey, do you let your employees go and buy property? If they wanted to, they absolutely could. But guess what? Nobody fucking wants to, because then they know that they're 100% on the hook for that property. Right. And they would rather just grow our portfolio as a company and know that their piece grows by that much more, and that they don't have to deal with the management and the bullshit and all the other things that come with it. So I think, dude, just educating them, making sure that they're growth oriented, painting the vision, and then just obsessing over that vision is all a big deal.
I love it, man. Thank you so much. I don't want to take up any much of your time.
All good, brother.
Thank you so much for coming on, man. Of course. Yeah. Where can people learn more about you? And when's your next event?
So we just had an event last week. So okay. I have a mastermind event. If anybody's interested in masterminds, hit me up. We got a really cool mastermind called Legacy Boardroom, where it's we do a couple of live in-person events per year, and then we do a couple of virtual events, masterminds as well. And then we do a lot of every single day of the week. It's essentially a board of directors for somebody's business. And so like we created it where my acquisitions guys available every single Monday to answer questions for people, anything they have on acquisitions. Tuesdays, my COO on operations. Thursday or Wednesdays, my chief investment officer, my attorney on anything SEC compliant, money raising. My HR director is there every Friday to help people grow their HR side or grow their team. And then it's usually, that's Thursday. And then it's either me or some other entrepreneur friend of mine on Fridays talking about something else. And so it's a pretty cool, unique, and because it's mostly virtual, it's we still do some big events in person and stuff too, but the price point's really low. But we have a big event in Austin, Texas next month. So yeah, man, appreciate that. Just hit me up on Instagram, hit me up on Facebook, send me a DM on either one of those, and I'm happy to chat with you guys, give you insights. We do a commercial empire, which is a 2-day event that's going on in next one I think is in May. Like middle of May or something like that. That's virtual. It's only $500 on how to scale from a single family into apartments. And we have amazing reviews on that, amazing results from our students on that. So we're super proud of that. But yeah, I'm not the guru that has a bunch of like different upsells and shit. I have Commercial Empire, which is a 2-day boot camp. And then I have 2 different masterminds. One's Legacy Boardroom, and then the other one's Legacy Family, which is invite only. So yeah, man, it's I appreciate you being here, or appreciate you having me here. You asked some amazing questions, and dude, just good insight, man. Great to connect with you finally, and spend some time with you.
Thanks, bro. And the last one, how the hell did you get Emmitt Smith to come to your next one? Like he's made way more money outside of real estate than he has football. Like he's a crazy businessman.
Dude, he is a brilliant business guy. So we were just looking for badass business owners that were in the Texas market. I was looking for a couple of people. I like Matthew McConaughey. I think he's got a great like business, like just kind of weird, eccentric mindset, but very like thoughtful and thought provoking. But dude, he's not willing to come and speak because of like fucking media has him scared of being like, yeah, COVID. Yeah. Oh my God. He spoke in front of 150 people and
right,
COVID's happening. Yeah. So he's not willing to do that. And then, I looked at a couple of people. I reached out to a bunch of people, and Emmitt Smith is right there in Dallas, and he's 3 Super Bowl rings, Super Bowl MVP, league MVP, 8-time Pro Bowler, and has a all-time leading rusher in the NFL. And not only that, but dude, he's made boatloads of money in his business dealings and in his real estate dealings. Like the guy is an absolute beast. And so we got him, got him to come out, man. Like, so we haven't, we got a commitment from it. We're going back and forth on some of the details and stuff, but he's coming out to the mastermind. Another person who's coming out is Tucker Max. I don't know if you know who that is, but he wrote the book, I Hope They Serve Beer in Hell. He's a 4-time New York Times best-selling author, and it's about a bunch of debauchery he got into in like college and law school, and a lot of trouble, a lot of stupid stuff. But then he's kind of like cleaned up his act and got married. He's got a kid, and then he launched a business that teaches people how to write books and stuff, and writes books for people called Scribe, and it's a multi-8-figure company, and he's out of Austin, and he's a really sharp business guy, really, really sharp, understands branding and marketing really well too. So he's coming out. My boy Ryan Pineda is coming out. He's got hundreds of thousands of followers on social media and has courses on social media growth, and has won awards for presenting on social media growth. So he's a stud. I got him coming out too. And dude, we just got 150 badass business owners that are going to be there. And we got a ton of fun shit planned for it too. So we break by 3-4 o'clock each day, and then go and do some fun social activities. So we got bands coming out. We got venues rented out. We got amazing Austin food, food scene that's going to be there. And just, dude, the amount of like, if you haven't been to a mastermind, you guys got to go to, whether it's mine or somebody else.
They're so fun.
Dude, they're fun. And the amount of connection that you get from them, and the amount of just like, dude, the opportunities that you can't even quantify it. You don't even know what's going to come from them. You go out there and you're like, holy shit, took down a deal that was a $18 million deal, raised $4 million, and did this and did that, and all came from the connections from this one event. Like, you can't even quantify it. But once you go out to one, you're like, holy shit, there's always a return on investment. So you guys got to plug in. Yeah, for sure. It's whether it's, again, mine, Mark Evans has one. Collective Genius is another great one. There's a whole bunch of them out there. Just plug into something. You guys gotta. It's lonely at the top. You know, when you're an entrepreneur and especially a solopreneur, dude, you gotta get around people who think at a high level. It's just, dude, I remember just like sitting, not knowing who to talk to before I went out to masterminds, and all of a sudden I got this social community of masterminds with everybody with 7- and 8-figure businesses who are all doing big things and growth oriented. And dude, you can't not do deals and grow by being in that environment. It's through osmosis, you'll fall ass backwards into doing deals. You know, it pays for itself 10 times over every single year. So it's definitely something you guys got to plug into. Masterminds are a big deal.
All right. Thank you so much, man.
Appreciate
Everybody,
you,
thank you so much for tuning in.